Mortgage rates have climbed this year. In fact, they've more than doubled since January. And this has both buyers and sellers concerned. So in this video, we'll share the most recent information about mortgage rates so you can keep up to date with what's actually going on in our 55 and older communities here in Corona. Hi, my name is Casey and I'm a local realtor. I also live in one of the 55 and older communities here in Corona. And on this channel, I share information about the housing market that affects our communities and our home values. And if you find this information helpful, I'd love if you'd hit the like and subscribe buttons below. Okay, so let's get started. As I mentioned earlier, mortgage rates have continued to climb this year. And for the first time in over 20 years, mortgage rates have reached the 7% mark. Now this is really hard to believe since we started off this year with rates in the low 3% range. And many people are wondering if this increase in mortgage rates is affecting the housing market. And the answer is simple. It's definitely affecting the housing market. The rise in interest rates is having a direct impact on affordability. And let me show you what I mean. Let's say that back in January, you were considering buying a home for $600,000 and you'd managed to save up 20% for a down payment. That means you'd be taking out a mortgage in the amount of $480,000 to buy this home. And back in January, interest rates were right around 3.25%. So that means your mortgage payment back then would have been $2,090 per month. But let's take a look at what your payment would look like now with today's current mortgage rates. With an interest rate of 7% on that same loan amount of $480,000, your mortgage payment would now be approximately $3,190. That's almost $1,100 more than what you would have paid just 10 months ago. So the harsh reality is many people simply can't afford this huge increase in monthly payments, and it's forcing buyers to give up on their home searches. And if rates continue to climb, affordability will affect even more people trying to buy homes. But what about home prices? You would assume that as interest rates climb, home prices would have to drop, right? Well, not necessarily. We recently did a video specifically on this topic, so I'll put a link at the top of the screen. But in this video, we shared information about why the housing market isn't expected to crash like it did back in 2007 and 2008. We are seeing home prices starting to drop, but not drastically. Depending on the area, we're seeing home prices drop between 5 to 7% right now. And in some areas a little more, others a little less, but prices definitely aren't crashing like we saw back then. So why aren't home prices coming down? Well, there's several reasons. First, many homeowners refinanced their homes in the past few years when interest rates were at record lows. And these homeowners now have really low mortgage payments. And even though many of these would like to sell their homes and move, it simply doesn't make sense for them right now. If these homeowners keep their current mortgages, they keep their lower mortgage payments too. But if they decide to sell, they have to accept today's higher interest rates like the rest of us. And this is keeping the inventory of homes for sale relatively low right now. And don't get me wrong, there are definitely more homes for sale than what we saw earlier this year. But the housing market just isn't being flooded with homes like we saw back in 2007. The other reason home prices aren't dropping dramatically is that most current homeowners have built up large amounts of equity in their homes. And again, this is due to the huge increases we saw in home prices during the past few years. And this is the absolute opposite of what we saw in 2007 and 2008. Back then, we saw home values crash across the nation. And the vast majority of homes that came on the market were what we call short sales, meaning the person that owned the home owed more for it than it was actually worth. And back then, it wasn't uncommon to see homes drop 30 to 40%. And in some areas, homes dropped over 50% in value. So many homeowners had no equity at all in their homes, and most owed much more than what they were actually worth. But even though interest rates have increased significantly this year, the good news is the housing market has stayed relatively stable for now. But if rates continue to climb, it will put additional pressure on the housing market, and I have no doubt it will cause it to slow even more. But I can tell you this, the Feds have been aggressively raising consumer interest rates for the past 6 months in an attempt to slow inflation. And even though mortgage interest rates aren't directly tied to these rates, the costs for getting a home loan have definitely gone up too. So in the coming months, it will be especially important to keep an eye on interest rates and inflation. If these increases by the Feds begin to work and inflation flattens out or actually declines, most financial experts believe that mortgage rates will begin to drop as we go into 2023. And we could see mortgage rates fall back into the 5% range. And this would be great news for the housing market. But if inflation continues to rise, many experts feel that mortgage rates will follow suit. Home prices could drop further, inventory would remain relatively low, and interest rates will probably push higher. But we'll keep a close eye on the market and continue to provide updates. And in the meantime, if you're curious about home prices here in Trilogy at Glen or the community of Terramor, you can watch these two videos to see the most recent home prices in the area.